So I'm going to be talking about the easiest way to find a bias when trading the ICT 2022 mentorship. Okay. Just an amazing playlist all around. Just incredible playlist. So definitely check that out after this video. I can only share what works for me in regards to finding a bias, and I find this the easiest way. But for a full complete understanding, you need to watch an entire series and learn that from the source as well. Okay? But let's dive into it, and I'm going to share my tips, okay? So really simple, really simple, really easy. So when you're finding a bias for ES, here's what I do. Whenever price has a confirmed swing high level and the market structure is bearish on the 4-hour chart, my bias coming into the day is only bearish. I'm only looking for sales until that trend switches. So for example, a daily swing low is put in and 4-hour market structure is confirmed, okay? Because I need both of them. A lot of the times once you have a daily swing low put in, for example, a lot of times that market structure will be making the switch on the 4-hour, but not always. So you got to double check and make sure the market structure is aligned as well. Sometimes it won't be, and you need to wait on that 4-hour market structure to be bullish as well when you get that confirmed swing low put in. All right, and just opposite for shorting scenarios. So the last few days on ES, my bias has been bearish. So the last few days it has been. Why? Well, we had the confirmed swing high put in for one. So look right here. What is a swing high? Swing high is when we got our highest candle in the middle and two lower highs on the left and the right. So right here, we have our highest candle, and then we have a lower high on the left. We got a lower high on the right. Okay. Now the 4-hour market structure was still bullish at that time that swing high was put in. So you'd have to wait. You'd have to wait for that 4-hour as well. So let's go down to that to look at what I was talking about. All right. I'm going to put in some day dividers real quick as well, just to kind of clean it up a little bit. All right. So you can see now it's just displayed on a 1-hour intraday chart, but I have day dividers put in so you can see each individual day. So this candle right here, see how it's higher than the one on the right and the left? That's a confirmed swing high, but the 4-hour market structure, which I consider the 4-hour chart a higher time frame chart, it's still bullish as well. So let's go to that so you can see it. So you see how there's our high, and then you got two lower highs on the left and the right. Market structure in there is still bullish, or right there. So market structure is still bullish in there. It's 100% bullish in there on the 4-hour as well. So even though you got the confirmed swing high, which is step number 1 for getting your bias, you got that confirmed swing high, but the 4-hour market structure is still bullish. So we need that shift in market structure. Now I'm not going to go all in detail about market structure in this video. I have an entire playlist on market structure for you to learn that. And I'm going to leave a link to my market structure playlist in the video description as well. So you can watch that after you watch this. Okay. But put simply, we had our shift in market structure right here. See this? We had a big down move right here. Then price came up, put in your swing point, we're confirmed, and it's trending lower at this point. So you need to your bias needs to be in the direction of that swing point. So if a swing high is put in on your larger time frame chart and your 4-hour market structure is bearish, you should only be looking for sells. Your bias is bearish until you get a swing low that gets put in and market structure on the 4-hour is bullish. Okay. And if you have a swing low that's put in, if you have a swing low that is put in on your daily chart and the 4-hour market structure is bullish, your bias is going to remain bullish until the swing high is put in or that 4-hour market structure turns bearish. I mean, that is a clean cut, simple way. Every single day that you come into the marketplace, you have a bias. It's that simple. You have a bias already. And now you're just keeping an eye out for your key liquidity pools for stop runs. That's all you're doing. So I'm going to go over this example from the other day or from Friday. All right. So you see right here. So this is the 7th of July, 2023. So you can see coming into this day, what's my bias? My bias is bearish. Why is it bearish? Well, because there's still no confirmed swing low on the daily chart. The 4-hour market structure at the time was still bearish. So coming into Friday, that was my bias. Coming into the day was bearish. Okay. I'm going to go to the Discord real quick. 1 second. So you can see right here, I said bias is going to bearish again today on ES, but short term right here at this moment, bullish until it comes out to take out those buy stops. So again, my bias was bearish, but when I say bullish, because I knew it was going to come up, or I knew likely it was going to come up and take out these buy stops right here. So this is where you would keep it out for like your key liquidity runs, and then your lower time frame shift and market structure, because everybody knows that. Everybody knows what the lower time frame shift and market structure looks like. Everybody knows the confirmation signal. That's where I had our eyes for the stop run, and then you can see this was the result of what happened. So we're going to be going over this setup here in a second. So you can see after price came up and took out those stops, we had the high impact news that came out that was our driver, and then boom, we get a nice big displacement to the downside after taking out those buy stops. And then I indicated that I think I want price to come up into a premium. You guys know the deal. We want to see it come up into a premium for an entry. Then we look for lower prices. All right, so this is what we saw happen. Now let's go to a 15-minute chart. Again, you can see it here as well. So you see these are our key liquidity pools. We have a key liquidity pool right there. So this was a key liquidity pool. We also had Hive Day, which is a key liquidity pool as well. And we had our bias coming into the day, which is bearish because there's no swing low. 4-hour market structure is bearish. Therefore, my bias coming into New York, I'm only looking for stop runs on buy stops. I'm not looking for any sell stops to get ran. I'm not looking for any buys whatsoever. I don't care. You're going to miss moves trading like this. You're going to miss plenty of moves trading like this. Sometimes you're going to get the direction wrong because it did have a big rip right here. Sometimes you're going to get it wrong, and that's fine. That's trading. That's part of it. You got to accept that uncertainty that comes with it. There's going to be plenty of days, if you take my specific way of doing it, that you're gonna go days without a trade. You're gonna go days without a trade, and you got to be fine with that. Okay, because I mean, still, if you're patient, you'll get 1, 2, 3 a week usually. Really solid setups, and that's all you need. That's all you need to make a career. So we got these buy stops right here. We had Hive Day buy stops as well. And then you can see as a result of news, what do we do next? After we have our confirmed buy stop levels that we want to see get ran, which we have right here, what do we want to do next? Well, we have news. So we have high impact news. Whenever high impact news comes out, after high impact news is done, that's a common time that you'll see stop runs occur. We then go to our lower time frame chart. And that's where we look for a confirmation signal after you run those stops. So you can see right here, we had price rip up. It took out those buy stops. I had my eyes set on that level beforehand, as you just saw in the chat. That was where I had my eyes. Remember, my bias was bearish coming into the day. And now I'm looking for a stop run off of this level. I'm just keeping and I'm waiting for a lower time frame shift at this point. I'm letting price show its hand. All right. After it takes those stops, what happens? Boom, you get a big displacement lower. Okay. Big displacement. This isn't some choppy price movement. This is a big displacement lower after news. Okay. It leaves our fair value gap confirmation in there. See that? Then price trades up into a premium, which is the confirmation signal above 50% equilibrium with that price range. And then what does it do? After it rebalances that price range, it attacks opposing sell side, aka low of day sell side liquidity. It attacks it. That's a good PT area, or right here. Right here is low of day, so it attacks low of day sell side. And then same deal. And then you can see price did end up eventually after attacking that sell side because it found, right now it's finding support off of this daily bullish order block. And it's pulled back into a daily discount at this point. So it's no surprise why it's having a big rip, because it's on support, daily discount. It's rebalanced at price action at this point, but then it ripped back up. But still, do we have our confirmation on the 4-hour? No, there's still at this point that this was ripping up, there was still no confirmed daily swing low level. Okay. Therefore, you're still looking for shorts. You're still looking for shorts at that point. Even while it's ripping up right here, you're keeping an eye out for that lower time frame confirmation. You're keeping an eye out for your higher time frame liquidity pools, your higher time frame levels, and then you're waiting for that confirmation, and you actually did get it. You did end up getting it a little bit later right here. See right there? And that was off of, I'm going to remove these data dividers real quick because it's getting pretty messy. But this is that rip up. It came up into what? It came up and tested a 4-hour bearish OB. It rebalanced a portion of this 4-hour. See this? This is a 4-hour bearish fair value gap. It traded up into a premium marketplace. It's already taken out these buy stops down here. And after doing so, after testing that higher time frame level of resistance, after rebalancing that price action, what happened right after doing that in a premium marketplace? You had a lower time frame shift. And guess what? You could have capitalized on this because you know why? Well, using the rules that I've outlined in this strategy, your bias is still bearish. Okay, maybe you were looking for previous day's lows to get taken and that didn't happen. No problem. you had another opportunity right here, and you could have milked a lot off of that. So it came up, it rebalanced at price action. You get the confirmation signal once more, lower time frame shift. Price pulls up into a premium marketplace where you could have got your entry, risking that high, and you got that big sell off. So again, the bias is bearish until a swing low is put in and 4-hour market structure turns bullish. Okay, and your bias is bullish. Whenever you have a bias that is bullish, it's when you have a swing low that is put in on the daily chart, and the 4-hour market structure is bullish, and it's going to remain that way until a swing high is put in and the market structures turn bearish. It's that simple. It's that easy. Every single day that gives you a clear bias to come into the market with. There's no scratching your head. There's no thinking about it. It's just a very easy, simple way to get a bias. Okay. And then you just keep an eye on your key liquidity pools that most of us know. And you definitely know if you've watched that series, you know the key liquidity pools to watch for. Then you look for that confirmation signal. And that's that. It's that simple.